Well, hi. It's the update for the week on currencies and gold and Nasdaq, and this is going to be a super short video because I think really all you want to know is what the strategy is, which direction we should be trading in, and the levels at which we should be trading. So let's have a look at it. So on Friday we saw the Bank of Japan intervening with the dollar yen by buying large amounts of yen and selling dollars, which brought the market smashing down from 152 down to about 146 during a period of heavy volume trading. So it was pretty significant, in fact, very significant. At the same time, we saw the Nasdaq rise. We saw gold forming a potential double bottom. This is a weekly chart on gold, and you can see a beautiful double bottom and a replica of a couple of weeks ago, the same candle shape of the same level. Pretty bullish. Although we're in a weekly downtrend, I think we're due for a retracement on gold and some of the currencies as well, the euro, the pound, dollar yen, and the Nasdaq against, the currencies against the dollar in the Nasdaq market. Now, so what happened on Friday was we had this intervention by the Bank of Japan. We had the Fed mumbling about perhaps slowing down the rate of increase of interest rates. We saw, which is obviously bullish for the market and slightly bearish for the dollar. We saw the dollar index collapsing down with a big bearish reversal off that very key level, just below 114, back to just below 112, down to that support level, about 111.80, and not really bouncing off it. So heading perhaps back down to 110 and maybe even 105. So overall, my strategy going into this week is long euro, long pound, long yen, in other words, short dollar yen, long Nasdaq, and long gold. So that's the strategy. Now, because we're potentially forming a short to medium term bottom on some of these currencies and instruments, there's going to be a bit of chopping around. Now, you've seen the chopping about on the intraday charts. We'll have a look at those right now. So rather than these going straight up from where they are at the moment, I'm hoping for a pullback on the euro and the pound and on gold and on dollar yen and the Nasdaq, so that we can get into some trades with slightly lower risk and a better opportunity at determining intraday which way these are going to react. Now, this is just an idea. It's a strategy. It could be wrong, but I think overall, by looking at the Bank of Japan, perhaps the soft pivot on interest rate rises in the US, potentially a drop in the inflation rate, some interesting GDP numbers. We've got earnings coming out in some very big names in the US markets this coming week. And we've also got a replaced British government, essentially, in the key areas that we're interested in anyway. That's the PM, Prime Minister Liz Truss, having resigned late last week, and also the Finance Minister. So the doves are out and the hawks are probably back in. The more conservative fiscal guardians of the UK set up there are going to be back in charge, I think. So that's going to be pretty bullish for the pound. And that brings me on to saying that the pound is probably my favorite play, along with gold, going into the coming period. Now, I'm not saying that we've got a complete bottom on any of these against the dollar or on the Nasdaq or in gold. I think potentially we've got some more downside in Nasdaq, lower than this year's lows so far at about 10,500. And perhaps we're going to be stuck in these parity ranges, or maybe below 1.04 for the euro, and sub 1.2, 1.3 for the pound, and perhaps some more dips back down to the lows towards the end of the year. We've also got midterm elections coming up. We've got the time of the year when the stock markets normally rally, and overall, it's a pretty good time to be short the dollar and long stocks and long the other currencies and gold. So that's my strategy. We want to see the dollar index break and hold beneath this 111.80 level. and we want to see the euro and the pound push up through these current resistance levels. I'm not going to go into it in too much detail right now, but if you have a look at the daily charts, you can see we've got some pretty key levels. There's one on the euro. We want to get up to around here, and there's a couple of things we've got to get through. This level here at about 0.99, then through parity, which is this level here. Then we've got to get up through this trend line. We've got to get above 1.0180 and then up to 1.0380. That's the strategy on the euro. Potentially, that's where we'll head. Maybe 1.02, maybe 1.0380 is a bit of a stretch, but at least 1.02 before perhaps a resumption of downtrend and a retest of these lows. The pound, I think I'm a bit more bullish on, and I think we could get up to much higher levels on the pound because the pound's pretty cheap, and we've had a significant reversal taking place after all of that furore a number of days ago. Well, a month ago now. And I think we could get up to 1.2, 1.3 even on the pound. So that's my favorite in terms of currencies, considering the politics around that. Dollar yen as well. I think we're going to get a lot of choppiness in here. It's not my favorite currency to trade, although I did trade it short. I did actually buy the NASDAQ right at the lows. I've been buying the NASDAQ for the last number of days very successfully. And dollar yen, I think we're going to get a lot of dramatic moves within this range formed by Friday's candle. But eventually, I think we're going to go a bit lower and get down to perhaps 140 yen to the dollar. So that's the strategy. Now, let's have a look at the hourly chart to have a look at the key levels. Now, it's pretty simple. Really, we want to buy pullbacks on the euro. And I've got the key levels in here. You can write these down. I've just drawn them on the chart. Keep things simple. These are pretty key areas of supply and demand. They'll offer good support if we drop back down to them, and that's at 0.9810-ish, 0.98, 9810, and then back down here at 0.9760 or 70 or 80, that region there. And you can refine these lines and draw them a bit tighter. What we want to do on all of these, and I'm just going to say it once, is wait for a pullback to these levels, wait for an hourly reversal and confirmation before continuing on with the uptrend. And by that, I mean we want to see hourly candles, reversal candles. We want to see dips down to support lines that I've got drawn on there, followed by an hourly candle reversal. We want to see breakdowns through those levels potentially, and then a break up above them, and then a retracement or a retest from the top before a bounce and a move up. Those sorts of intraday strategies. You could even just use the 20-day moving average. The 20-day and the 20-hour moving average, which is this green line, as a support and resistance line. Any dips down to it might be support. Any dips through it and then back up through it again might act as breakout trades, that sort of thing. So you want to be watching this very carefully intraday. But in general, a dip down to about 98.20 and 97.60 would be great on the euro if we get those pullbacks. And just be patient, wait for those. They probably come along because, as I said, in bottoms like we're forming now, potentially forming, we're going to get a bit of chop, which always occurs in these sorts of markets. Same thing with the pound, my favorite one, a dip down to 1.1250 or 60, thereabouts, this line here. Very key level. You can see there was a lot of activity there. Very key area of supply and demand over there, support and resistance. And the same thing has happened on several occasions. If that fails, same sort of thing here at around about 1.12, 1.180, 90, 1.12. Same sort of thing there where the 20-hour moving averages. So those are the sort of levels I'll be looking to buy the pound and the euro, as I've just mentioned. Dollar yen, well, this is a very messy currency to trade. It really wants to go up. We keep on getting intervention by the Bank of Japan. Often when these interventions take place, they don't last for too long. But in this case, it's pretty convincing. So I think we could get very messy here. But any rallies back up to particularly 150, the big key number that we were watching the whole time. Will we get there? Will we get there? Well, we got there, and we carried on moving through it uninterrupted until the real line in the sand at 152 was drawn, and the Japanese started buying enormous amounts of their own currency and selling dollars. And we got this huge crash down through here. So what's going to happen? Well, I think any rallies up to these green lines, that one we formed on Friday, 148.50, then 149, and then even with a bit of luck, we could get back up to 150. And I don't think we're going to get above 150 again. And that will be a bonus level to be selling into this move, for a move down to perhaps 140, as we saw in the daily chart. Dollar index, well, as I said, we want to get through that level at around about 111.80 or 111.50. We've just crashed down onto that support level. We've held above it. We haven't broken through it, but we haven't bounced up convincingly from it. So what we'd expect is for a move through here on an hourly basis, a bounce back up from here somewhere, back up to 111.50, 111.80, maybe 112, a retest of that level from underneath, and then a resumption and the move lower. And then a close beneath there on a daily basis is really important. Watch for that. It's super important. That's what we want to see before a resumption of that downtrend. Dollar index, well, we could be heading down to 110 and then perhaps even down to 105. So that would be somewhere between, I don't know, 1.6 and 4.5% drop in the dollar index, which would be just great. Gold, same sort of thing. We saw that double bottom on the weekly chart. And gold, I'm just generally bullish on gold. Yes, we could get some more correction later on in the year. People want to be buying things now at this time of the year. Hedge funds, the politicians want, in the midterm period, the politicians want the economy to look a bit better. And we might see some soft pivoting from the Fed, which is what they've already started mumbling about. So all of these things point to a bit of a rally in gold, in sympathy with a drop in the dollar, and in sympathy with a rally in the Nasdaq. So every time the dollar is strong and the Nasdaq's weak, gold suffers a bit. But gold has remained pretty buoyant, and if you compare the dollar, the gold price to other currencies, it's stronger against them, against the pound and the euro and the yen and so on, than it is against the dollar, obviously, because of the dollar's strength. But it's not looking too bad at all. So I think any pullbacks and dips are opportunities to buy. And we've got 1,645, 1640, and 1635. Those are the key levels. Same strategy as the euro and the pound. Wait for dips down to those levels. Wait for an hourly reversal confirmation, whatever that might be. It could be a short-term chart indicator. It could be a MACD. It could be an RSI. It could be a stochastic crossover. It could be any of those. I don't use those myself personally, but you could use those, or simply wait for an hourly reversal candle and a confirmation against those levels, or a breakdown, perhaps down through 1645 down to 1640 or 1635, and then a break up again from the underside through those levels, a retest from the top on the way up, and then a bounce off the top would be the place to get into those positions. So long on gold at those levels. And then NASDAQ, NASDAQ's an interesting one. I've had this picture megaphone pattern on my chart for a very long time now, all the way back to, about a month ago when this pattern started forming. This is a reversal pattern. I don't think that NASDAQ has potential. I really don't know. I don't think anyone knows, but I think there's potential for the NASDAQ to move lower next year after elections, after the year-end rally. Over the last, I've had a look at 20 or 30 years, every single midterm month this time of the year, the market has rallied without fail. So it doesn't mean it's going to happen again this time, but the patterns of history would seem to indicate that that's likely. And so any dips on the NASDAQ are great to buy. This megaphone pattern, as I was saying, the problem with these is they start off small. As you can see, we're looking at that. So I've been trading the bottoms of these and selling the tops very successfully every time. But as time goes along, this megaphone gets larger and larger, and the distance between the top and the bottom becomes huger and huger. But it's actually done extremely well so far. And you can see that last dip down to about 10,400 a few days ago And that massive rally, I think it was about a 5.3% reversal from the bottom to the top, took place off the bottom of this megaphone pattern. And this extreme fluctuation on volatility is necessitated by this pattern because that's the shape of the pattern, but it's also indicative of big buying and selling and uncertainty in both directions. And that's exactly what we've seen. And eventually, the market has to break out of this pattern, and it just gets too big and too wide for it to keep on going top to bottom. But the side that it fails to reach, the first, which is now the bottom, so we've made higher lows since that last dip down. So we've made a higher low there and a higher low there, and now we're moving up, and the top is fairly consistent. Every time we've reached the top, we've kind of reached it, and we haven't made lower highs. So a breakout through there and a pullback. That level is at about 11,400. Breakout through 11,400, a pullback to 11,400, and a bounce thereof or off it will be a great place to buy NASDAQ. And we want to go back to the top of the megaphone, which at the moment is at around 12,000. It also happens to be pretty key psychological resistance at 12,000, and also a key chart level. If you have a look at your daily chart and draw a line at 12,000 and 11,800, those are the two levels. If we get through there, we might have a rip your face off bear market rally, dead cat bounce, not so dead, quite a living, alive, screaming cat, all the way up to 12,800, which is the big number. I expect that there's an outside chance that we'll get that. And the market will swing, everyone will become bullish, and that'll be the end of the bear market until it collapses again. We could see another new NASDAQ low early next year, or perhaps even very late this year. Probably not late this year. We'll probably rally into Christmas time, and then in January, like it happened the last time 2 years ago, the NASDAQ began to drop. So, so that's what I expect is going to happen. And so wait for those. And if we don't get a move up first, a move up through that level, 11,400, and we start to move down at the open of play this coming week, then look to buy into dips to those levels. These are the key levels, and that's at 11,050-ish. And 11,200. Those would be great areas to buy dips. If you can't get the dip, even down to here, actually, I don't think so, but you never know. We could expect some fairly dramatic swings, but any dips down to 11,000 or 10,900, that area, be a little bit scary, but still, it would still be bullish. But we hope not to get down into those levels. We hope to either break up through there, pull back, test it from the top and move up, or pull back immediately down to one of these support levels and then move up. So that's a strategy for the NASDAQ going into this coming week. So that's my overall picture, and I wish you the best of luck. These are tricky, choppy markets, but actually it's been a really good month for me so far, and I think that this is a pretty good opportunity going into the next month or so, into the midterm period and towards the end of the year. So good luck with that, and we'll have another update next week and see how we went.